Been to a mastermind meeting today, so-called mastermind meeting. A lot about HMOs and all that type of stuff for it. What do you think?
Like we've sort of alluded to, I think numerous times over, I think a lot of the property strategies are, you go through the same processes just in a slightly different way with most property strategies, don't you? And HMOs is no different. There's still identifying a property to buy, there's still the legals, the purchasing, if you're doing a refurb and then refinance at the back end, and like I say, HMOs are no different to that. So I think it was just interesting to see how within that strategy, how different people are operating within it in terms of what, you know, who the end user is, for example. Are you just sourcing it on to an investor and just happy to take 3 or 4, 5 grand fee, washing your hands of it, or are you sourcing it, then appointing a builder and sort of making a 10-12% margin on top of the build costs and doing a full turnkey service? Are you doing commercial to residential? There's loads of different ways of operating a HMO business. So yeah, I mean, something that we spoke about just before you turn this on, with our own experience as it is already, that's something that we could start offering more of, isn't it? That turnkey service.
We was thinking more about, because the business we operate is very capital intensive, what could we add and plug into what we already do to create more and more cash flow, as in trading cash flow. And I think sourcing deals and the project management that comes alongside all the redevelopment stuff, project management with the HMOs and semi-commercial stuff, turning the uppers into HMO or just apartments, project managing all that.
Yeah, it could be lucrative. And I think the learnings that you get from doing that, I mean, my background is estimating, surveying, but it's not completely, my experience is more on the financial side, so it's the technical side where, although I have got technical knowledge, it's not on the same level as a project manager, for example, or a contracts manager, for example. But I know if I did more and more of this sort of thing, I mean, HMOs are sort of, they're repeatable, aren't they?
Cookie, yeah.
Yeah, that's the classic phrase, yeah. So once you've gone through the process of doing just probably 1 or 2 of them, you know you could repeat that.
Like what we was just talking about before I flipped the camera on. The average sourcing fee now is probably between 4 and 5 grand now, probably. So let's say you have 4 grand per deal that you're selling. You sell 2 of them. The average refurb on a 4-bed, 5-bed HMO, say 5-bed HMO, what are you looking at now? 45 to 55 grand.
Depending on the type of HMO, I would say anything from probably 40 to 60, 70 grand, depending on end user, tenant type, blah, 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 blah.
Yeah.
So if you're taking a 10% cut of that as well to manage that process.
Yeah, 10% on top, but it's not a cut, it's on top of it.
Yeah,
project
on
management
top of
fee.
the refurb costs. You could easily be talking, at the top end, you could be talking, 12 to 13k per deal. On the lower end, 8, 9, 10 grand.
And you can turn them round in, once they're complete, you could turn them round in 3 months easy, couldn't you?
Yeah, I think once you've got your build team really succinct with what you're doing, you'd turn them round quicker than that. A lot quicker than that.
Yeah.
Just the art of all of that is just pulling it all together and having a reliable build team that is prioritising your work and not somebody else's. because a week delay, even just a week delay on a project of say 10 weeks is quite a long time, really.
It impacts everything else as well, though.
Of course. So now I thought on the whole, I thought it was a decent day. Obviously, the real value comes from some of the guys that have been doing it for a long time. Not really on the resi side. It's the sort of commercial conversion type stuff that then inevitably move into sort of bigger city centre apartment block type developments. That seems like a fairly natural progression. So instead of maybe doing 10 5-bed HMOs in Warrington, to use an example, you're doing one 50 apartment block a year, just as a bog standard example. But that's, you can see a clear progression, can't you, with certain people doing things like that.
Yeah, but you have to pay the price, don't you? As we've said, you gotta go through. You ain't gotta go through the steps, but it's a very. You can see that progression in people, Corey, naturally.
Yeah, it's sort of like a rite of passage in some respects.
Yeah, that's it. Yeah.
But then on, you know, in another, in the next breath, we've done HMOs before, so it ain't like we're newbies, not by any stretch of the imagination. We've been doing this for quite a while, clearly, but we haven't done HMOs for ourselves for a while.
No.
And we're going straight in with one in Kidderminster with 21 good-sized rooms. But we've already sort of gone through the process of the learnings from
the past,
years ago, to have the confidence to go ahead and do that. The planning side of things was a very useful thing to listen to today as well, wasn't it?
Yeah, there was an architect talking, although he was very good. Smart guy. But he hits
Just
high
little
end of the market.
Again, innit?
Yeah, I think it's interesting to see how different areas and different investors are hitting different sectors of the market.
Yeah, different professionals.
Yeah, they're spending a lot more on refurbs, but they're breaking ceiling prices.
Yeah.
Whereas some of the other guys, they're going to the lower end of the market, leasing them to government-backed contracts like Serco and I think Mears. We don't deal with them, but Mears. And all they need is a white box, innit? That's all they need.
Yeah.
So
a white box, not even en suites. I mean, a lot of the time it's a room of 6.5 square metres is the smallest room you can offer, isn't it?
Yeah, but I mean, I wouldn't even. But if that's what they want, then
if that's your tenant type, a Serco, then
I see.
And they're going to sign a 5-year deal. We ran some figures, just some make-believe figures, didn't we, on a basic 3-bed property as we've been driving back here. On, I think, was it 130 odd grand purchase price with your costs, say 140. A refurb of about another 40, so you're all in, say, 180. On refinancing, it was leaving in the deal about 30 grand, wasn't it? But it was cash flowing
11. So you get all your money back.
All told, you were doing,
years.
I think you said a third, didn't you? It's a 33% return on investment.
Not far off that, yeah.
So you can see why that is attractive, clearly. I mean, that's a good return. And that market don't seem to be slowing down either, does it?
No. And that was only on 4 units.
The Serco market,
yeah,
don't seem to be slowing down at all.
No. Well, it's
all
asylum seekers, isn't it?
Yeah, effectively, yeah.
Government-backed contracts. You can't get much stronger. Leases, really. And as they were saying, there's a lot of lenders coming into that market now because they've seen the demand.
Yeah.
I can't see that slowing down. To me, that's like a hybrid of a residential and a commercial. What's the word? Deal. If you're putting 5-year contracts on them, that turns to me into a commercial thing, not a residential one.
Yeah, 100%. And then there was a different segment about valuations, weren't there, which we've sort of, again, touching on a little bit there.
Yeah.
And the experience gained from going through that process, I think, for anybody is really important. I remember I did one myself in 2017 in Pensnet, and you sort of fall into the trap. I was new, that was my first HMO property at the time, so going back 7 years ago, and you get taught that if you're doing a HMO, you'll get a commercial valuation, and a lot of the time, especially the type of deals that we were speaking about at the start of this video, where you're basically converting a 2 or 3 bed terrace property, which is effectively a family home, and you're just carving it up into a 5 bed HMO, you ain't going to get a commercial valuation out of that.
No.
You'll get a bricks and mortar or a hybrid between the two.
Yeah.
But you've just, to loop it back to what you've just said there, it's interesting now that because there's more and more money going into that market, there's more lenders going into it as a result. And if your tenant type is a Serco type HMO and all you're really doing is offering 5 bedrooms, which are basic, which are small, and you're offering 2 bathrooms, so you've got no more than 3 people sharing a bathroom as a minimum standard, that they're now looking at that as a potential product where they will provide a hybrid type mortgage. So that's something to reassess, I think. Based on that becomes a lot more attractive to people, doesn't it?
I think a lot of it comes down to the underlying tenant in that aspect, what you've just said there.
Because we've done it privately, haven't we? So privately to us, you want to be targeting a better tenant type where you can get higher rent. But to turn that on its head, if you can just put out a fairly bog standard HMO and you can stick a 5-year guaranteed rent contract on it,
Yeah.
why not?
Yeah. As he said there, that's net figure.
Yeah, there's
No
no
management
overheads.
costs. So you're laughing there as an investor. I'm an investor, a developer. And when I look at a 5-year contract, government backed, I'm going, that's my cup of tea. Then I'm happy to take 10% less rent for that.
Yeah. For no headache, no management.
Yeah.
No turnaround of tenants.
But I'm looking at it going, we could find these deals, because we don't want to buy everything for our own headache. But you could find them, charge 4 or 5 grand up front, free to an investor, project manage them, 10% fee, and then you could find the lease for them, charge a fee for that, and then you could even sell it for them if they wanted to sell it. Or if they'd probably want to hold it, but you could use your brokers to refinance for them. You could do what you want.
Yeah.
We've got good relationships with the auctions. We could start putting some of them in the auctions if they wanted to do that. Thinking of cash flow, I think that's something that we need to seriously consider. I do.
Yeah. It's crazy, isn't it? Like, it just proves that different. You can skin a cat in so many different ways, can't you? So the example that we just give there, probably going back 7 years ago, the very thought of us creating a bog standard HMO, single rooms, and
Yeah, it's just crazy.
in the private rented market, that ain't going to be very successful.
Not at all.
At all. You're going to have poor quality products in terms of the conversion of the property that you do, because it's bog standard. No offence, you're going to have poor quality tenants. There's no longevity to that property, is
No,
there?
not at
It
all.
might do okay for 12 months, that's
No.
about it.
Yeah.
It's going to get damaged to buggery
Yeah.
and very likely get turned back into a buy-to-let property within a 12-month,
Yeah.
18-month period anyway. But this is now bringing a different spin to it, innit? A different take on it. If Serco are going to sign a 5-year deal, yeah, fucking hell, I'll happily do you a 5-bed HMO, no problem at all.
Yeah.
And if I only need 2 bathrooms, yes, sound.
Yeah. I think a lot of investors have been shook as well in that market by what happened with Home REIT and Home REIT with a big public company that went under.
Yeah.
they had bought that much stock leased to these crappy social housing companies.
Yeah.
So you got to make sure that the leases you're putting in place are good, solid organisations.
Yeah.
Because a lot of them, they don't know what they're offering. The care providers or whatever else, they were putting 25-year leases on some of them. Like private.
That's just fraudulent, isn't it? Some of that.
One of them, in here, it's public knowledge, so whatever, I don't care. The Lotus Sanctuary in Wolverhampton, 25-year leases they were offering. And the main guys were making money flipping the properties on with their own leases. Then they'd sell them to the funds at a 5-6% yield, and they'd make a fortune. But they've gone under because they couldn't keep paying the leases because the councils weren't giving them the money for the tenants.
Yeah, I mean, that's fraud in a nutshell, isn't it? I don't know because I don't know enough about that example, but I'm going to assume that a lot of that, the funding that Lotus would have been getting would have just been basic LHA stuff as well, wouldn't it?
It was LHA, but
so if they're saying, say, one bed rate round here now is £90 a week,
yeah,
and they're putting on a lease agreement that they're getting £150 a week.
Yeah, and they were.
That's just fraud.
They were doing that. Do you know why they were doing that? Because they were exempt.
Yeah,
LHA exempt. So they were getting 300 or 400
That's
or
how
whatever
they were
for these
bypassing
people. That's it.
The processes with selling them to the funds.
Yep, that's it. But then they couldn't get the money, so they were defaulting on the leases, and this public company weren't getting paid. Shareholders up in...
Pensions.
Yep, shareholders in uproar.
Yeah, that's a mess.
So anyway, I think the lesson there is make sure you're working with the right people and right organisations for these type of deals. But we've got to look at our big picture, haven't we? Where we go and what we're doing it for.
Yeah.
I know that if you start producing these type of deals for the investors we worked with in the past, the doors would open for a lot of bigger stuff in the future.
Yeah, that's a big part of this, isn't it? Not just, we're well versed in HMOs as it is anyway. However, doing more deals for other people will inevitably bring those certain individuals that might have deeper pockets than us or access to deeper pockets than us onto your bigger projects, and they come start working with you directly. You ain't just sourcing to them; they're working with you as a shareholder.
And that's what's happened.
Business.
That happened to me a couple of times. So I sourced the deals, did a couple of deals with them, and then they said, "Now, come on, we'll do a deal together." Then that's how you build relationships.
You've built trust. You've proven your worth.
100%.
In whatever business dealing you've done, they'll keep coming back more and more and more. We have quite similar in this respect of not really enjoying that environment that we've been in today.
Yeah, networking, yeah.
But there's always at least one decent thing that you come away with, whether you like them or not, isn't there?
Yeah.
So like that, we've been there for a full day today, and a lot of what we've spoken about, we already know, we've already done it. But you can sometimes your brain will start ticking. You see what other people doing, like the nuances of the HMO strategy as a property strategy, and we've just come away and had 15 minutes on your phone now talking about it, and going, why the hell are we not doing that? We can do that
Leaving
now.
money on the table, are we?
We can do that now. Why aren't we doing it?
Yeah, you're right. Yeah, you're bang on, mate. You're bang on.
So even though we've spent 8 hours of our time or more today there, we've both just gone, there's no reason why we can't source and do one of them deals a month. There's no reason.
At least. Yeah. But
as a minimum, one a month. So that's, you've got to say that was worth it.
And our bottom line could be another 100 grand there.
Yeah. So in terms of matching that with what our sort of main goals are, so to speak, that's going to really support it cash flow.
Yeah, cash flow. Yeah. Because a lot of this game's so capital intensive. If you would know you've got a predictable 10 grand more, 2 deals I say, 10 grand more a month coming in predictably, no brainer, innit? And then the doors that open up from that in 2, 3, 4, 5, 10 years time,
huge.
You're in a completely different arena.
Huge, yeah.